All right. Good morning, everybody. To begin with, I would like to acknowledge the traditional owners of the land on which we're meeting today, the Wurundjeri people of the Kulin Nation, and pay my respects to elders past and present. Hey, thanks for inviting me to speak to you today about how banks can support the resilience of our customers. And just listening to the previous presentation, there are a few topics more important for the time. Not only does a strong banking system need resilient customers, but we have a duty to help our customers stay financially healthy. And for ANZ, this duty is reflected in our purpose, which is to shape a world where people and communities thrive. And to help us think about how we can live up to the duty, I would suggest there are three areas in which we can act to support customer resilience. These are, first, the economy, including the availability of housing in the economy. Second, the products, services and education we offer. And third, the help we provide to those who are experiencing hardship. Now, turning to the first of these, the economy is the most important determinant of the financial well-being of our customers. As we're all aware, growth has slowed and inflation remains stubbornly high. Many in the community are feeling this as they struggle to make ends meet. And for a number of people, times are incredibly tough. Foodbank is delivering roughly 65,000 meals every day in Melbourne, while heartbreakingly, some Australians are skipping meals to keep up with everyday costs. Thankfully, however, employment levels remain strong, as you know, and savings built up during COVID remain high, providing many families with some level of security. And in this environment, of course, house prices are continuing to rise. That's good news for the roughly 2/3 of people who own a house or are paying off a mortgage, but incredibly frustrating for those who want to buy their first home. And first home buyers today face the triple challenge: higher deposits, higher borrowing costs, and lending standards that are tougher than in previous generations. The latest ANZ CoreLogic Housing Affordability Report finds that buyers need almost 50% of a median income to service a new loan on the median dwelling value. Put simply, the average Australian can't afford the average Australian home. Because it takes because it takes many even longer to save for a deposit, they need to rent for longer. The ANZ CoreLogic report also notes that the portion of income required to service rents hit a record high of 32% in March. So high rents make saving for a deposit even harder. So the question for the industry as we consider supporting customer resilience is, what can we do to help get people into housing? So at ANZ, we're continually reviewing our lending practices to make sure we're providing credit where we can. We are, however, mindful that current lending regulation creates a high barrier. There's more work to do on improving the supply and the cost of new homes. So to help, ANZ lends to the property sector that builds homes and works with it on new housing models like build to rent. We've also a target to fund and facilitate at least $10 billion of investment by 2030 to deliver homes to buy and rent that are more affordable, more accessible and more sustainable. And since October 2018, we've funded and facilitated over $5.7 billion towards that goal. Now, the second area where we can help customers is by making sure they have the right products and helping them learn about financial resilience. Our new platform, ANZ Plus, allows us to offer simple and intuitive financial wellbeing tools like setting a savings goal or using roundups to set aside money for a rainy day. Now, with over 740,000 customers already on board ANZ Plus, it's really pleasing to see that 47% of them are actively engaged in one or more of our financial wellbeing tools. And for those, of course, who have greater need, we're also providing financial wellbeing programs, including our long-running Money Minded and Saver Plus initiatives. Now, the third and the last area of supporting customer resilience is how we assist those in real need. Many of our home loan customers seem to be doing okay, with 79% ahead on their repayments, with offset balances, while offset balances are growing year on year. However, the number of ANZ customers in hardship has risen over the last year to around 3 in every 1,000 people. The number for small business customers was similar, but only at 2 in every 1,000. Now, while these numbers are historically low, they will likely rise as the economic environment continues to be challenging. And of course, behind these numbers are the people who are struggling. And so to help them, we're working to improve both the experiences and the outcomes for those seeking assistance. Like many in the room, we're encouraging those in difficulty to come to us sooner. We have processes in place to help identify at-risk customers, including using data analytics and modelling to proactively identify those facing hardship. Now, this helps us reach out earlier to customers to understand whether support is required, such as a payment pause or a loan restructuring. Now, thankfully for many, support is not necessary, but when it is, we can help customers get back on their financial feet and improve their resilience more quickly. So thank you for your time, and I look forward to discussing the topic more broadly with you in the panel. Thank you. I'm over there.
Thank you, Shayne.
Thank you.
Well, it's time to continue our deep dive into supporting customer resilience. Please don't take my wearing maroon today as a proud Victorian as any indication of partiality north of the border. All right, let's kick it off. James, you're our data expert. What is the data telling Fifth Quadrant?
Thanks, Natasha. Let me jump up and get into it. I'm currently very jealous of Christopher because I've got lots of data and I'm only getting 5 minutes. So no researcher has ever presented anything in 5 minutes, and so if Natasha drags me off the stage, you'll know why. So I'm going to focus a little bit more on the negativity of the data, and I don't want to be a downer, but obviously that is the thing that impacts hardship. So that's me. Because I've got lots of data, drag me or catch me when you can around the place, because I won't be able to get through everything today, but we have data from lots of sources. We talk about consumers and we talk about business all the time, and these are the sources that we're using for this presentation today. This is all public domain information, and we work a lot with the CBR, lots of their research, but just again, if you need more information, please let me know. So let's dive into consumers initially, and what is the outcome of the cost of living crisis? Well, ultimately the outcome is we've got lots of people wandering around. I think Andrew inferred to it, where we're surviving, but it's a battle. So 16% of the population, adult population, are unhappy. I'm not sure about the kids, but I'm sure it has a big impact. And 31% are saying they're indifferent. So it has a real impact on the day-to-day. And again, I think Andrew referred, are we the lucky country? Well, 1 in 3 say the cost of living is the worst thing about living in Australia. So I agree with Andrew, we are the lucky country, but for a reasonable proportion of the population, it's a real battle out there. 26% rate their financial security as 0 to 3 out of 10, and 27% say they are doing it tough. So those numbers are all pretty similar, and if you extrapolate those numbers over 20 million adults, let's say at best you've got 5 million adults on a day-to-day basis that are doing it tough. So what does doing it tough mean? You can see it's fairly broad-based across all of those cohorts. It means that that dark blue bar at the bottom is I don't have enough money to meet all expenses. So reasonably small proportion, but those 5% are going backwards. And the light blue part of the chart is I have enough money to meet household expenses with no savings. So again, I stress that it's around about a quarter of the population, adult population, that are feeling the worst of these issues, and obviously those are the ones that are more likely to fall into being vulnerable customers or hardship customers. You will see that Gen Y are the ones that are suffering most, and again, no surprises there. Rents, mortgages, children, marriages, and the day-to-day expense of living. I think Gen Y are 28 to 43 now. I remember when they were young. So there's a lot of expense going on there, and the regional customers are also slightly higher, although it's broad-based. Don't want to contradict Marnie on this, because I agree with what she was talking about in terms of resilience of people in the regional areas. But there are higher expenses and lower wages generally across a lot of regional Australia, and hence they are impacted. Looking forward, what is concerning us? So despite energy bill rebates, 61% said over the next 12 months, I'm really concerned about rising energy bills. I'm really concerned about affordability of essential products, food, fuel, etc. The next layer, I'm worried about the ability to pay my rent, my mortgage payments, and accordingly rising interest rates. Concerningly, access to affordable healthcare. Again, this is no secret. Bulk billing, etc., has been well discussed, and therefore a lot of people are trading off their healthcare needs. That impacts well-being generally and mental health as well. And 26% are worried about their job security. So 4% of people are unemployed, but there are 26% who feel they might be unemployed. Our research in the SME sector clearly indicates that recruitment is going backwards. People are not looking to employ more people, and I suspect, I don't want to argue with people who know much more about this than I do, but I suspect over the next 6 months there will be a rise in unemployment, and hence I would bet on interest rates going down as opposed to up, which will make people happy, hopefully. In terms of, again, implications, what does this mean? Healthcare is an issue. What are we doing? Well, we're postponing routine medical checkups. We are talking to Google, and in my case, ChatGPT, because it's much more sensible when it comes to healthcare issues. And we are skipping medication. So 22% said they're skipping medication. Well, not everyone's on medication, so there's a lot of people skipping medication. So it's not good in the long term. So now jumping over to businesses, hopefully I'm getting through a fast enough pace. But 4 in 10 are concerned about interest rates. 2 in 3 are concerned about wage costs. So the minimum wage going up again impacts retailers, hospitality, and those consumer-facing businesses, and they're struggling at this moment in time, as we already know. 42% have experienced significant financial challenges in the last 12 months, and only 48% of businesses, which most people don't know, actually make a profit in any one given month. So you've got 25% who are reporting a loss in any one given month. That's 1.2 million businesses, 1.25 million businesses are reporting a loss. Okay, and what's happening? Well, obviously weak economic conditions, supply costs going up, reduced customer demand, as we know the consumers are putting their wallets away, and increased competition as things get tough, people put their prices down, competition goes up. And in terms of the internal factors, we've got high levels of debt, but we've also got tax liabilities. Again, we know the ATO is getting more stringent on chasing this money and getting this money back into the government coffers, and hence that is impacting a lot of people. Technology. So the issue around technology with business is very apparent. Larger businesses are adopting and implementing lots more technology. Smaller business can't afford it, don't know how to do it. The AI research that I do for the National AI Centre clearly says that those with less than 20 employees are well behind medium-sized businesses, 20 to 500. So the gap gets bigger. Impacts on ability to attract and retain staff, and the usual issues around cash flow. And interestingly, poor strategic decisions. So businesses won't blame themselves for making bad decisions, which ultimately impacts their business.
James, you've got about a minute.
Thanks, Natasha. So that impacts, so basically 44% are saying they have personal issues. Physical health, mental health, relationships, financial insecurity are all being impacted. 22% have no cash reserves, so they're putting their own money into their businesses. 30% are siphoning, and 46% have reduced their own income. So again, lots of these people are struggling on a day-to-day basis. Hence 10% have said they expect to struggle to pay their loan repayments over the next 3 months, and 11% are consulting banks or financial counsellors about financial hardship. That's 250,000 plus businesses. People don't expect it to get better, they expect it to get worse, both businesses and consumers. And on a positive note, we are still resilient. We're still looking at ways of making sure that we don't go broke. We're smart in terms of using cashback offers and rewards, spending more time researching, again, I think the runners, the trainers, conversation about buying better brands. People are saving up. They are trying to find brands that will last longer, which they can buy on sales. And positively, 37% of businesses are still growth focused, improving efficiency, innovation around products and services, staff productivity, renegotiating supply contracts, and discontinuing products that are not profitable. That's enough for me.
Thanks, James.
Thank you.
Now, Peter, we've heard about the data. You're on the front line at Financial Counselling Australia.
We are.
What are you seeing?
So for those people that don't know, financial counsellors provide free advice to Australians in financial difficulty, and we do that through a variety of ways. Face-to-face services, there's about 1,100 of us around the country. We also run the National Debt Helpline, the 1800 007 007 number, and we also run a small business debt helpline. So whilst the, I suppose the theme of this morning to date in respect to resilience is somewhat, be aware, be alert, but not alarmed. What we have seen in the course of this year at least has been a huge uptake in people seeking our advice in regards to their financial situation. Roughly, there would have been about 100,000 people that have sought advice over the course of this year, and that kind of goes back to about the 2020 levels, and it's certainly, an uptake on the last couple of years. The main issues that people are presenting about, number one is mortgage or rent, number two is credit card, and thirdly is energy debts. In regards to, say, small business related issues, the kind of people that we assist are more the mum and dad or one or two small businesses, so not the large, the larger small businesses, and in effect those kinds of people are the type of people, for want of a better expression, of buying their own job, if that makes sense. And in that regard, we've seen a significant increase in the amount of people presenting for support around small business. And as was just said there by James, the biggest referrer is the ATO. They don't have a vulnerability framework, they don't have a hardship program, unlike the banking and other sectors. So in terms of the major states where people are presenting, definitely Victoria and South Australia are disproportionately represented in hardship presentations, and that's probably consistent with some of the earlier talks this morning. People are doing it tough and people are resilient, and I suppose in our role, we see very much that A, people want to pay but can't, and B, they'll do anything before they'll go to a hardship program. And the data that comes out that we see from the banks in terms of the uplift of hardship applications is still relatively small and relatively minor. But underneath that, there seems to be this kind of two-step approach where banks are saying we're not seeing a lot, we're wanting to promote our services, and where people want to get help, please go. But I think people are quite either afraid or still sceptical about the kind of support that they get. But long story cut short, we definitely are seeing an increase, and in particular those agencies that are, of those 1,100 financial counsellors, most of whom work in the smaller community services sector and multicultural agencies and the like, they're also flat chat with people wanting to see. We're seeing an increase also in what we'd probably call middle class consumers, where maybe in the past they haven't sought assistance. So why they're not getting to hardship programs is probably a conversation worth having, but I'll probably stop there and we can talk about that further.
Thanks, Peter. I mean, it is an interesting sentiment that the people accessing FCA's helplines don't want to access hardship programs that banks provide.
I think it's positive firstly that people are prepared to pick up the phone. No one wants to say they're in financial difficulty. It doesn't matter what the circumstances are. That's just a very human, natural thing to think. But the fact that people are picking up the phone and I suppose through the National Debt Helpline, it is somewhat anonymous, and the chat function has certainly increased, and that seems to be a lot more around the Gen X, Gen Y kind of consumer, where they prefer to use that method, which I'm sure people in this room would know. But certainly, the fact that people are reaching out, I think, is positive. But there does seem to be this somewhat disconnect between what we're seeing versus what you guys are seeing.
Well, thank you, Peter. We might turn to Shayne for some commentary on how banks can help customers build their resilience.
Sure. So, and maybe if you don't mind, before I'll just respond to that, because I think it's an interesting dilemma, isn't it? So we see the data, we know that there's stress out in the community, we know that people are reaching out for help in various shapes, ways and forms, and yet I think, I can't speak for the entire industry, but I think for the industry, we're all reporting historical, still very low levels of stress, defaults, hardship, past due, whatever data you look at, it's still remarkably low in historic terms. And I think part of the reason, and again, we've been banging this drum a little bit, is certainly for ANZ, and it's up to others to speak, but I don't know that we're representative like we used to be. We don't bank the middle anymore. We bank the wealthy. We skew more, not necessarily out of choice. Sometimes it's just the reality of the regulated environment we live in today. It's just hard to get a credit card today. Harder than any time in anybody's lifetime in this room. It's harder to get a home loan for all sorts of reasons. So the sort of people that we're banking, the people that we interact every day that have debt are not the middle Australia that it used to be. And so I think that's part of the reason. That doesn't mean that our customers are not facing the stresses that you're talking about. So it's just a different world. I'm trying to get a mind around that. So again, try not to be, not being delusional, and I'm not saying that there's not stress, but it is a different data set that we are living in today than I think that banks in the past. So what do we do about building resilience? Well, we know actually the number one thing you can do to improve your resilience is have a savings buffer. That is the number one thing you can do. And it's interesting, it's all sort of irrespective of how big it is, just having some savings buffer is the number one thing you can do to improve your resilience. The psychology shows the number one thing you can do to build a savings buffer, if you don't have one, is set a goal. So people who set a goal to have a savings buffer are much more likely to do it. So it's a bit like making a commitment to go to the gym or run a marathon or go on a diet or whatever. If you set a goal, you're more likely to actually do it, particularly if that goal is made public. So giving people the tools to set a savings goal is one of the principles we have in ANZ Plus, and it's really interesting. 32% of our customers in Plus are setting a goal, saying, hey, I want to save for either a rainy day or for my kids' education or a car or a holiday or whatever it might be, and then actually giving you the tools to get towards that. So that's what the research shows, and I think it's sad that actually in the past banks have made that hard, not intentionally. It was quite hard because, you had to go and set up a different account and you had to go into a branch and set up a different account for different things. And so all the digital tools we have today are really making it a lot more easier for people to be able to manage their money and get on top of things and actually get insights into, it's interesting when you go and do the research. Most Australians, that's a broad statement, don't know whether they are spending more than they earn. You need to, there's some of us that are sort of geeks and get out a spreadsheet and figure it out, but and it's quite hard to know. You sort of figure out at the end of the month, did I have more in my bank than I started? It's probably okay, but most people don't know because we haven't been able to help them with those sorts of simple insights. So I think, there's some really simple positive nudges and insights we can give people that just help people get on top of their money so they can make decisions about, hey, I do need to cut back or I need to think about my savings.
Thank you. So, Peter, we've heard from Shayne.
I have.
There's an answer there. How do you think banks are going in terms of supporting customers that need assistance and who are doing it tough? And what do you think's working? And what do you think banks can do better?
Yeah. So we do a point-in-time survey of how banks and other lenders are dealing with Australians in financial difficulty. And we're pretty well placed to comment on the efficacy or otherwise of that program because we deal with your teams on a daily basis. In terms of, and so we did one late last year, and I think still the data is prescient and worth reflecting on. In regards to the major banks, certainly the average as a score out of 10, which was based on consistency of approach, how they listen, what are the outcomes, letters of authority, all those kinds of things were in the region of around 7 out of 10, which we think is fairly good, and it's been consistent there like that for a number of years. We also felt that that banks on the whole, their response to family violence, as was talked about earlier this morning, has significantly improved, and I think there's some really positive things that the banks are doing in leading in the sector there, and that definitely came through the survey. Support of people that are homeless or with unrecoverable debt as well was really good. So they were the kind of the positive things that came through. In terms of areas to work on, definitely we felt that certainly the subsidiary banks of the larger banks didn't score as high as the larger bank owners did. In other words, I could see no reason why that there should be such a difference in overall score, and that's something that we've been communicating directly to the banks, where the subsidiaries have been quite poor or inconsistent with their approach, and there is some work that's going on in that space. I think also we noted that there's work to be done in terms of people that are as prisoners and scams, and to be fair, that the survey was done late last year, and I'm aware that there's a lot of work happening at the moment on scam prevention and friction, but just to note that was an area that was picked up. In terms of non-bank lenders and others, they on the whole failed in terms of their hardship programs, and of course we're meeting with them in regards to that. Just touching on the ASIC report that came out the last couple of weeks, I do note that there were people that didn't seem to be staying with the hardship team at the early stages, and no doubt that data will be sliced and diced, but certainly we would say that there needs to be a bit more work done on an end-to-end approach. So in other words, if someone comes into a branch and says, I've got particular issues, then it's really incumbent that person is supported through that process and gets to speak to the right person. Language is really important, and how we communicate with the consumers is important. As we all know, the term hardship is an industry term, and people don't need to be using that word to suddenly get the open sesame door into the right department. So again, there's lots of things I think that we need to continue to be working on to make sure that the people that do present to your team are getting to the right person, and two things and there's not a cookie cutter approach, but people, number one, are listening to the story, the staff are listening to the story, and then putting in place responses that are relevant to that particular story.
So you talked about the importance of language. Language is so important. People don't know about this special concept called hardship. We all know about it in the room. What insights can you give us about the language that people do use? Is it doing it tough or can't pay? What are you hearing?
Well, I mean, I'm sure there's people in this room that have got first-hand experience of that, but definitely, can't pay, or there's been an issue with my job, or there's something has happened. It's also about being proactive. So I've spent the last 4 years working in disaster recovery areas before I took on this role, and I think again, it's about thinking through the reality of what's happening and trying to look ahead. So in disaster land, what I see happening with members here is that there's a pretty short-term approach taken, whereas when you're looking at the northern rivers of New South Wales and central west New South Wales, their recovery period's a lot longer. So you've got to be matching the recovery period, all within prudential guidelines, I get that, with with the pace of recovery.
Thank you. James, you're a small business owner. What are your observations regarding small business hardship?
Generally, there's a couple of things in terms of commentary there where I completely agree with Shayne's observation in terms of the percentage of customers coming into hardship or defaulting and servicing the wealthy, etc. I think the data from the energy industry clearly indicates that they're at the highest level of defaults that has ever been. Okay, so that's the population. Everyone has an energy bill, and so that does indicate that Shayne's customer base is not the average Australian, and I don't think we can argue with that. In terms of SMEs. You've got to remember that 1.2 million of the total population of businesses in Australia are that householdy type business. They kind of merge this life over here with this life over there. They kind of start businesses. They know what they're doing. They have an idea. They don't have access to research like the bigger organisations do. They don't have access to technology. So I think they can get themselves into trouble. I think when you talk about language, I think hardship is not the language that any of us like to use. And I think that you can see from my data that basically vulnerability is the issue. There is a lot of organisations and a lot of consumers that are vulnerable. How do you intercept those people? How do you engage those people? Shayne's tools that he's discussed are the perfect opportunity to get people engaged. You know, I've managed my cash flow as per Shayne's spreadsheet for 20 odd years, right? So I do that because I'm a geeky market researcher, right? So, but ultimately, I think we need to engage with those vulnerable people so that they don't get into that hardship area. And people do make bad decisions, and it doesn't matter whether you're a business person or a consumer. They make bad decisions in regard to money, and they need to have easy access to tools and to people to get out of that. But it's about vulnerability to me. It's you're going to get those people at the bottom there, the 5% that you're probably never going to be able to completely protect. But there are people in that vulnerable bracket that you can.
And I think there's another population that you could, and again, I totally get that there are people struggling, so I don't want to dismiss that. But there's another part of the community that are struggling because they can't get access to credit. You know, and they don't have a voice. They don't go to AFCA, they don't ring up debt lines. These are people who can't get a home loan, or people who can't get business funding for their business for all sorts of reasons, banks, risk appetite, regulation, whatever. Those people are a growing part of the community, and they are largely, they're silent. We don't collect data on them as much as other areas, and that's a group that I worry about, because they're the people who create jobs, create prosperity, create wealth, et cetera, for the economy, and they're the sort of silent middle.
We might pause there. Time for some audience participation. Do we have any questions? There is a roving mic.
Fantastic. Throw your hands in the air if you want to ask a question. I'll ask one to kick it off. Grab the attention of our microphone wranglers if there's anything you'd like to ask. Did I hear you say, Peter, that younger people are happy discussing financial challenges and all that with chatbots? And I find that fascinating. Tell us a bit more about that.
So younger people than me, the National Debt Helpline has a chat function, and so we've been able to monitor the age range of people that have been using the chat function. It's definitely younger consumers compared to, say, people that are presenting more face-to-face or on the phone. So definitely that's something that's been really important for us. And I suppose for those younger consumers, what they've been talking about still has been issues around housing, be it either rent or mortgage.
And is the idea then, because I mean, absolutely noticed, I haven't sampled your chatbot. Some chatbots I've used are up to function, and others are woefully, within a couple of seconds you're going, can you tell me, get me to a person. Is the idea of yours to eventually organise discussion with humans, or to point them to information, or what role does it play?
We actually use humans.
Right.
So we've got financial counsellors that are actually monitoring and answering the chat function. So we're not using AI for that. I mean, there's obviously it's a really interesting conversation to be had around the relationship between AI and how you support Australians in financial difficulty. But from our perspective, we still use simple old humans to answer the questions.
Fantastic. Any questions in the audience? Throw your hands in the air if you'd like to grab the attention of the people wrangling our microphones. Anyone? Gentleman over there, to my right.
Skills organisation. I'm really interested in, when you think about your customers, the skills that they have to be able to interact in the way that you're talking about. Do you have any insights about whether or not they've got the abilities to be able to engage in the way that you would like them to engage, to help them to get to the outcomes that you would like them to get to?
Is that for me, or?
Generally.
It's a great question. I mean, The reality is that most people don't wake up in the morning, thinking about banking. Maybe we do in this room, but other people have more important things to do with their lives. I think a lot of the new technology does enable all of the banks, and I think all the banks do a pretty good job here, giving customers better tools that are intuitive, easy to understand, easy to do. You don't need to read the manual, all that sort of stuff. So I think there is a lot happening in the sector that the industry, frankly, should be proud of, where we are giving people better tools to be able to ask questions of the financials, where the money's gone, are they getting ahead on all those things? It's like all technology, right? We all go wherever and you buy technology online or at a shop today, nobody looks at the manual. You just throw it, and you expect to intuitively be able to use it at a first go, or look it up on YouTube how to do it. So banks have to do the same thing. So our job is to make it so simple and compelling for people just to be able to use it intuitively. And I think there's lots of evidence that is the way the industry is going. I think the industry, we get a hard time for all sorts of things, well deserved. But banks should be proud of that. We're really pretty good at commercialising technology and putting tools in people's hands. You just think about what the industry has done with mobile banking. It's remarkable that people can do their banking sitting wherever they like, 24 hours a day, in real time, in the comfort of their home, largely for free. It's pretty cool. And so we're just going to have to keep adopting the tools, and Gen AI is obviously the new frontier, and that's pretty exciting too, actually.
And because the interesting thing for you guys is people aren't just comparing you to other banks.
No.
People are comparing your functionality
Correct.
to ordering a pizza,
Correct.
buying a book,
And we've got a long way to
putting a bet
go.
on the footy, all that.
We've got a long way to go. I was setting some money off to pay for something in the US or a transfer. The person would give me the wrong account number. It's really hard to find out, as opposed to when you think about it, if it was Amazon and I'd bought something, I can track where it is, I know where the shipping's going. So there's lots of things that we learn from in terms of other technology. But in general, I'd say the banks deserve a more positive score than not in terms of enabling better outcomes for customers and giving them the tools that they need to improve their financial well-being and get on top of their money.
Great stuff. Thank you so much, Natasha. Wonderful session. Please give Natasha a big round of applause, and her panel, Shayne, Elliott, Peter Gartlan and James Organ. Thank you, guys.
Thank you.